Good morning, everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, November 8th, and I'm Michael Boutros. Good to be with you guys this morning. Pooja's in the house, Steve, Ziad. Got both Peters here today, Iman, D, Aurelian. Great to see you guys all in the room. So, interesting plays finally panning out with some of that yen strength finally starting to come through. Dollar yen, we are on the swing side of things. We've been talking about that key resistance in dollar yen, so we'll go over that. On the menu for today, alongside that is obviously DXY, Kiwi dollar. You do have the New Zealand interest rate decision from the Reserve Bank of New Zealand at 3 p.m. Eastern today. Obviously, the daylight savings shift here in the U.S., so right before the close of U.S. trade. Typically, the RBNZ is right after the close, so it's just this month where it's going to be shifted up 1 hour. It'll be at 3 o'clock. So we'll go over the implications for the Kiwi. We do have some research from Prattle, which we will share with you as well as far as what expectations are from that central bank. We'll go over Euro dollar. Not really interested so much in Euro dollar. Euro yen looks like the better player. You might have seen Jamie highlight that on the swing update last night as well. Obviously, dollar yen, pound dollar, Aussie dollar, dollar CAD, and I do just want to take a quick look at crude. You know, the focus stays higher in crude, despite what everyone's saying, but the near-term immediate risk, I still think is for a little bit more of a pullback. You inevitably do want to be long, but we'll take a look at some of those levels. I highlighted that on Daily FX yesterday, so you might have seen that report. Okay, any other trade setups or questions that you have? As always, throughout the course of the session, feel free to throw them on the message board at any point. Okay, here's what we look like to start the session. DXY, not much really to talk about here. I'm not going to spend any time on this today, guys. You've seen this chart a million times. The focus is the key slope support, former slope support, now resistance off the 2011 lows. We've been looking at the weekly chart, and this is really all that matters. We've been talking about price struggling at this region for some time, and that's really still the focus. You saw it probe again yesterday above that trend line, failure yet again, and it closed below. You can't get constructive until we pop through. Momentum has continued to flatten out. You even have some slight divergence into that last high we made and a pending trigger. So if we are to break lower here, it would sort of be a nice indication for a little bit of a pullback in the index. Initial support, I would be looking at the monthly open. Okay, the monthly open comes in at 94.63. That's just below a parallel right here that we've been working with within the confines of the ascent. And that's the break that would shift our focus back to 94.20, 94.15. Soft target, really nice pivot in price, former swing highs, as well as the lower parallel. That takes down to like 93.80 or so. So, you know, longs are at risk, bottom line, while below that major long-term trend line in the dollar index. So where does that leave us with some of the other crosses? We'll take a look at the euro in just a moment, which is obviously a huge portion, 60% or so of this index. Hey, man, hello, dollar CAD, please. It's on the list. I got you. So we'll take a look at that in a moment. But for the index, just, you know the critical level that we're trading at. All right, I do still think that you possibly get a breakdown if you move below 94.63. If you push through the highs, there's really nothing to stop this thing from heading right up on into 96. Okay, that's how critical this region is right now. So clear-cut levels on the index. Any questions? We've gone over this chart many, many times over the last couple of weeks. No changes to any of those key levels. Okay, so from last night's update, Kiwi dollar. Here's what the Kiwi looks like heading into the RBNZ. You know, we talked about the weekly chart on the Kiwi earlier in the month. You know, the basic premise is the key support barrier that we're coming into, the 2016 open, the low day close for, for the year, and the objective yearly opening range lows. It's all here. Okay, 68.28 into 68.54 is what I've had for some time here as support. Couple things to keep in mind. We broke below the uptrend. Okay, the near-term uptrend off the lows. I guess this is relative, as if you say near-term, but off the 2015 low. The reason I have conviction on it is because we have 3 touches here. That was a concerted break. Objectively, we should stay bearish below 70.38. Really, the 70 handle will be the ideal resistance, but as long as we stay below this key region of resistance in 70.38, a basic 38.2, you'd basically still want to look lower. With critical support still at 68.28. So we have a clear picture on where we are in trend. Okay, if this breakdown is real, sure, little interruption at the yearly opening range low. You see it pop back into 70, 70.30 on a max stretch, and you look to see if you can get that downside break. If we recover beyond 70.38, you still have to deal with the 200-day moving average there, but it really would shift the opinion. It really would shift things. Aside from this upslope, you have the 50 line for the downslope, and this is off the 2011 highs. So multi-year formation. Median line's been a decent pivot. Obviously, the lower parallel caught the lows. The 50 line, resistance, resistance, resistance. The break saw acceleration. Break saw acceleration. It also converges right on that region. Okay, critical resistance 70 into 70.38. On the intraday chart, I do have 70 as sort of the main level of resistance, but just keep things in focus here as we head into the interest rate decision. Now, as far as that's concerned, we do get, again, some proprietary research here from Prattle. They do rating and scoring for central bank rhetoric and policy. They kind of rate what they expect to see as far as the tone, whether they're expected to be dovish or hawkish. I'll read you the report they sent us this morning. So, forecast is that the RBNZ is likely to hold rates and issue a neutral or slightly dovish remarks. The analysis says, despite significant declines in the New Zealand dollar, the RBNZ is likely to hold rates at its monetary policy meeting this week. The weaker currency does not appear to be sparking significant inflationary pressure. Inflation is holding steady at just 1.9%. And under the leadership of an interim governor, the RBNZ is unlikely to make significant policy moves, even with sentiment declining into dovish territory. Excuse me. Like his predecessor, who was Governor Wheeler, you guys all remember him, the acting governor Spencer, who's there for the next 6 months, is likely to indicate rates may not rise for some time, though his language may be softened a bit to mitigate any further declines in Kiwi. So on whole, guys, the summary is that they're expected to hold rates, but with a slightly dovish tilt. They're unlikely to be too dovish, again, so they're going to try to mitigate any further declines in the Kiwi here. But at the end of the day, markets aren't expecting a hike. If they could turn out more dovish than expected, that's kind of where you would start to look for a little bit more softening in the Kiwi. But just keep that in mind, that there's no hike expected. So if they hold, it's not a reason in and of itself for the Kiwi to turn over. It's really going to be what the accompanying language is. And they have an interim governor right now, Governor Spencer, who's only there for 6 months. Governor Wheeler obviously stepped down. And he's unlikely to kind of want to make waves as soon as he comes in. So that's where we stand on the fundamental side of things. Inflation is still soft. They're not going to be in a hike they're not going to be in a hurry to hike. With that said, here's what Kiwi looks like on the daily chart. Okay, and this is the intraday. Here's the daily chart. Again, there's that key level of support, 68.15 to 68.28. It's the 2017 yearly low day close so far. Also note that the monthly open for November is also right there. And then you have the 2016 open, which has been a decent pivot in price, and that's at 68.28. There's resistance, the 100% extension of the decline off the highs. It was a perfect support on that bounce that we made right on the 19th before a slight rebound. Obviously broke it to the downside right after. We reversed and tested it as resistance just 1 day later. So I do like that level. Again, it's on that long-term slope support from 2015 lows, and that's where you'd look to see some more resistance if we were to spike higher. So how would we play the RBNZ today? Well, a couple of things, or a couple of different scenarios I would be interested in. If we get a sudden spike in the Kiwi and we get a rally into this region, I would be looking for exhaustion. Okay, doesn't mean if we spike here, just take a short and pray. No, it's not a strategy, right? We want to see how price action reacts, but that would be where we would want to see some rigid resistance. It's also a basic 236 retracement of the decline. So it's a nice area of resistance, just some basic slope, 1 test, 2 test, 3 tests. You could count these as separate tests, but that really reinforces this slope. A parallel off that extended off the highs, found 2 touches here. That slope also converges on this region. So really nice spot. If we were to spike higher into this region, I'd be looking for some exhaustion. Obviously, if we break through this 618 line, which was perfect resistance, earlier last month, that would shift the focus back into the 71 handle. Not our favorite scenario, right? We want to see a hold here. So a spike, fade, or if this thing just breaks down, it's really the break below 68.74, 68.73. Again, the objective October low day close, which is now also the weekly opening range lows. Okay, a break below this is really what's needed to fuel things. Now, if we get a decent opportunity to get in, I just want to warrant one thing, guys. You still have to contend with 68.28. So on a scalp basis, you'd still want to be wrapping up most of the trade here. If you want to leave some on to try to preempt the break, that's fine as long as the stop is at break even on the rest of it. But I wouldn't be targeting anything through here, guys, unless you at least have your stop at break even or better. Subsequent downside targets in the scenario that we do get a break, you're looking for that median line there. I wouldn't stress it because obviously we kind of dilly-dallied there last week. I'd be more so looking for the key 618 retracement. That comes in at 67.40. Okay, so primed and pumped for RBNZ. This is what the chart looked like last night. As we were looking at that channel, little pop higher. Again, 69.50's initial resistance, opening range highs, or the range highs for last week. You can see that we failed here this week. If we break there, I don't want to really be participating in this move. Okay, I want to see some exhaustion on a push here to try to get back on the short side. We might not get quite up there, guys, just as a quick note there. So if we fail ahead of that, that's fine. You still want to look for a break of that channel. And then 68.70 would be the sort of conviction move on just an objective weekly opening range break. Okay, as it stands right now, all it's done is set a perfect weekly opening range. There's your weekly opening range low, weekly opening range high, failed to even test the lows, and you're in this mini consolidation. So look for the break here today on the RBNZ. Either a fade off of 70 would be great, or if a breakdown from here, look for a rebound to get short, again, trying to see that break below 68.30. Anything higher above 70, if this were to break out, I'm not interested. I'm not interested. Something else might be at hand if that were to happen. Any questions on Kiwi heading into the RBNZ interest rate decision later today? Okay, focus is for some sort of exhaustion high to fade. I do want to see the pair lower. All right, so that's for the major event risk. That's number 2 on the session. Going once, going twice. Let's do euro, and then we'll do euro yen. Okay, so number 3. Here's what euro looked like yesterday. I kind of talked about this in the webinar, and we talked about this. How it's just not really my favorite play right now. Let me take a step back. So in the webinar, we noted that look. The thing looks lower, right? We were talking about this yesterday in the morning. It looks like it wants to make a low, but the decline has, it responded to the initial measured move. And I went over this yesterday as well. What is that initial measured move? Well, that's the head and shoulders formation of these 3 points. So there's these 3 points, which gives you a measured move into 115.54. And then there's the larger head and shoulders, which would be a much deeper correction. We checked that out yesterday. It's somewhere around 128 and change. Excuse me, 112.80 and change. So long story short, this was an initial area, a measured move of which, if you were going to see some sort of near-term rebound, would be the first step you'd want to look at. Well, guess what? The low yesterday was exactly 115.54. It rebounded right off that. We were talking about the 2016 highs, 116.16 as initial resistance. An ideal area to find some exhaustion, possible area to look to short this thing would be if we got into that median line there. It was right around 116.50s last night. I think that's what I wrote here. 116.45, 116.50, 46.50, right in that quick zone. Again, the intraday chart highlighted that as also the November open at 116.46. So you have really good, clear targets as far as the euro is concerned, in my humble opinion. Here's what it looks like now. Again, back to the daily chart, there's that measured move for the head and shoulders formation, the initial one. Seeing a little bounce, there's the monthly open as resistance. okay? And that's also that median line. I think a really nice area, if we were to get a rip higher, I'd like to look for some exhaustion. Till that happens, all the euro dollar has done is make a simple weekly opening range above support. Beautiful plays. They're always beautiful plays. So you already got multiple tags of the 2016 highs resistance at 116.16 right here. That's the major level you want to look for heading into the U.S. session. If we plow through this, again, if you got the guts and you kind of want to try to chase it, wouldn't necessarily recommend it, but you would be looking for a stretch into that 116.46, 116.50s, and that's, my friends, where I would look to get. I'd look for a strong reaction. You know, if you plow through, sayonara. You're looking for 1780s on the upside. But if it holds, if you get that exhaustion, it might be a sweet spot for a little bit of a short position, looking for a move lower. Okay, remember where we are in broader trend, always very important. This is the 120-minute chart, but if I take it out to the 240s to give you a little bit more clarity, here's what the euro looks like. Very, very clean slope lines off the high. These are all just parallels. Very nice pivots, pivots, pivots. Slope support was perfect, perfect. Just turned ahead of it. This could be a raised floor. Okay. So if this is the case, it would be a sign of exhaustion. And certainly in momentum, you're seeing price action has made a lower low. The oscillator made a higher low. So that's my concern with trying anything on the short side here. It looks like it still needs a little bit more of recovery before it turns back. Okay. Remember, you can click on that camera button, guys, on the top of your GoToWebinar screen if you want to take a snapshot of any of these charts. But no change to any of the levels. Same chart that was presented last night. Questions on euro dollar. A little bit of a rangy bound price action in some of these pairs to start off the month, start off the week, and that's okay. That gives us further clarity when they finally break. So if you've been a little bit frustrated with the majors, you kind of just want to make sure that you're shifting your focus to what matters right now. The RBNZ overnight, in afternoon trade today for the Kiwi. The euro, I want to see if we get that pop in 1646, but it hasn't been my best favorite play. Euro yen has been on the move, and that was something else that we've been following on the intraday charts as well. So the last time we talked about euro yen was back here in October. Just to give you a quick reminder of what we looked like back then, you know, it had made a nice drop into support. Here's what the daily chart looked like, and it was 131.70 was that region of which we said, all right, look, here you could see a little bit of a bounce. You'd inevitably look to sell that bounce, okay, because we came off of a key critical long-term Fibonacci consideration. That 618 at 134.28. It's pretty much capped the advance for the entire year. Momentum was flattening out. You can see here the momentum signature making that lower high. So it looked vulnerable for a turnaround, but we were at support. So back on October 30th, we were looking for that rebound to give us an opportunity to get back in on the short side. We inevitably got it. Okay, there's the rebound. It came right off that support level. Oops, on the daily chart. It came right off that support level, okay? Came right into the former swing lows, 133.10. That held, and here we are, right back at support. And this was the focus last night, is that we came back into this 131.70. What do we do from here? Well, unfortunately, I was looking for a little bit of a recovery to try to get in. You didn't get it. You might have seen, I think Jamie put out a trade last night, if I'm not mistaken, as well on this. I think he had an entry just higher as well. But I kind of wanted to see this thing rally. You know, we noted initial resistance at 32.28. That's where I wanted to kind of get in. Jamie had an entry at 132.25. So obviously we didn't get that bounce higher. Here's what euro yen looks like right now. But we didn't get that bounce higher. It's just continued to kind of grind lower, and that's okay because dollar yen is doing what we want it to do as well. So where's euro yen? Here it is. So here it is. Okay, and here's what we looked like last night. So you got a little bit of a bounce. It came just shy, 132.16. So we didn't get the swing trade in at 132.25. I was looking for 132.28. That's that nice pivot in price, and again that 2016 swing high. And here it is, turned lower. So bottom line, I don't want anyone to get too excited from here. If you're not already short, we need a better entry. Okay, we're way too far off the highs from here to kind of try to jump in. And 131.58/65 is a pretty significant support barrier I would respect. And here's what it is. Again, just to continue to find a focus this. Remember that 131.70 level we were talking about? Well, it's the same region. Okay, basic slope support. I guess let me show you this on the daily chart first. Basic slope support, really nice 50 line resistance, the break saw acceleration, support, a little messy, but we came back, rock solid support, a little bit of bounce. Here we are again. Okay, 2016, what is that, the high close, 131.70, and that 50 line is right there as well. Objectively, last month's low is right below, and that's what we're checking right now. Okay, here's what it looks like on the intraday chart. So look, we adjusted this slope here. Pooja had a great idea yesterday to bring that slope pivot point from here to here. It actually did pan out pretty well with that resistance, and even this break below the median line. I like what we're seeing. However, we can't ignore that uptrend support that we were talking about. So again, we probed well below that region, and personally, I thought it was going to get a clip of this, which is the first measured move. That's the 618 extension of the decline. It gives you 131.25. We kind of capped out right ahead of that 131.40. But I want to see what's going to happen to the U.S. Open here at this level. If we open the U.S. trade and push lower, do expect that 131.25 level. Major support, or a little bit more of a significant support pivot for me would be 130.69. That's the 2016 Open. But again, converges on slope and real clear pivots. Even on the gaps, came resistance, plowed through, failed there again. Once we broke it, instant support, and moved off. So keep that level in mind, right below 130.70. Euro yen on the weekly, Pooja. You know what? I haven't actually checked out what my weekly chart looks like. Let me take a look here. So this is what I have for the weekly, Pooja. So you're looking at the June 2016 low. Yeah, okay. So I didn't use the actual June concerted low. I don't like using these really emotional spike lows. If you take it off the subsequent low in July, I actually think it gives you a little bit better of a pivot. Something like that could work. You know, I always tend to defer to the kind of the deader slope. So that had me looking here. Okay, this is the 52-week moving average, if I'm not mistaken. Oh, that's a 200-week moving average. And it converges dead on with the median line down here, 130.14. Yeah, this was a big region that we turned from. So you'd like to see that drop a little bit lower. You'd like to see that drop a little bit lower. And there's the 100% extension at 130 flat, 130.10. That'd be right here in this region. Look at that. Look at that. That's perfect. That's a sweet, sweet convergence. No, it's the shift fork in the upper median line acting as support, maybe a channel. So you made this a shift. Let me see what it looks like. Could, but look what happens. Look what happens. Even if that is what you're looking at, Pooja, the upper median line parallel converges again on the 200-week moving average. So although I personally wouldn't necessarily be working with this one, you know, it's an art, guys. Everyone's got their own sort of take on how they interpret these trend lines. This slope has been represented already with those red lines that we were looking at. So I was just working with the regular pitch to give me both sort of renditions. Okay, so I will be looking at that red line. It's a little bit lower as far as where it is in time, but near term, that's still sort of a level I'd be focused on. Does that make sense, Pooja? So we will see. Pooja says yes, that 200-week moving average. We'll keep an eye on it. Yeah, Pooja, I think it's been a decent player in that pair specifically. Who brought that up to me? Someone brought that up to me. Oh, I think that Jamie and me were talking about it last night. Anyway, what was I going to say? Oh, so this is Euro Yen, right? And the reason that I like this is more so I want to see yen strength. The reason I was concerned yesterday and what I was saying is the divergence that we were seeing on the 2-hour chart was pretty evident. Again, these are typically strong divergence signals. So I was concerned that we would get the rebound. That's why we were looking for entry on a drop before this drop. We didn't get it. Market dropped. We got to wait to see what happens. If this holds into the U.S. Open, I still would expect that near-term rebound. If we push close and push lower, if you've got the shorts on, hold them. If you're not holding them, don't chase. 130.125 is not too far off. That's the first measured move. And again, 130.69 would be a nice spot after that. So I don't know if we'll get entry on this if you're not already in, guys. Let's see what happens to the U.S. Open here. Levels unchanged from last night. Questions on Euro Yen? And again, if you guys want that weekly chart, here it is for your reference. You can kind of scratch this now. Okay, that is Euro Yen. Dollar Yen, let's jump into that. Yenski, it's interesting. I feel all hot and bothered. I've been talking about dollar yen now for a couple of weeks. Here's what it looks like on the abomination side of things. Where was the last update? There we go. So, dollar yen. Where do I begin? We were talking about 1330 into 1350 for, it seems like, what's been weeks. Since the start of the month, even earlier in the month, we were looking at that 113.44 is still like such a critical, 114.30 rather, such a critical resistance. And you can see that, and specifically in dollar yen, it shows up on multiple different time frames. Even on the weekly charts here, basic 618 retracement decline from last year's swing December high. You take it back to the daily charts. There you go, looking at the same exact level of the convergence, not only of that 618 retracement, but former major swing highs for the year. The former close swing high that you made back in May, swing highs here. Again, near term, you had slope even within the confines of the ascent off the early lows. Slope resistance, and even on that day, early in the week when we first probed higher, we capped out right at that same slope. You see that, guys? I hope you can see it clear at home before pulling back. So we've been looking for resistance here. And it's the abomination. It's going to take its own bloody time before it does it. It's going to fake everyone out with these couple of spikes, but at the end of the day, resistance holds. Okay, and so far I'm encouraged by the price action I'm seeing. Now, a couple of things I want to show you here on the weekly chart, on the daily chart, before we move into the intraday. Things I want to see happen and materialize in today's price action. I do want to see momentum close below that momentum trigger that we looked at earlier in the week. We got a 3-point touch. It broke. It even moved into it as resistance yesterday. I want to see this hold firmly below this slope, and that would be a near-term momentum trigger. From the daily standpoint, which is always encouraging, and would suggest that you have a little bit more of an exhaustion trade here on the way up. You had some decent divergence on the daily charts on that last high. Key resistance, want to see a firm push below the monthly open, i.e. the monthly opening range lows. So any way you slice it, it's got to get us a little bit of a downside draft here today to validate it. Now I have 1346, if I'm not mistaken, on the intraday chart as support, or 1344, it's right there. It's a former swing high from back here in an October trade. Decent pivot in price, not the craziest, but you also have that lower parallel here for the near-term upslope that we've been working with. Here's the 240 minute. Okay, so basic critical resistance. We talked about this as soon as the market opened on Sunday on this crack, saying, listen, if this is the break, there's nothing to stop it from going to 115.40. We immediately failed early in the Asia session, came right back below. Yesterday made another attempt and failure yet again. This is an objective break of the weekly opening range lows. What we want to see is an objective break of the monthly opening range lows. It's the same level, I'm sorry. Either way, 1344. You see that we tapped at perfect support there? That's the break we need to see today. That's the break we need to see today. And everything looks good. I mean, from a daily standpoint, you saw the momentum trigger. From an intraday standpoint, yeah, we could not get too much below 40 here on this last drop, but resistance pretty much at 60 on the way up here. Struggling, 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 struggling. Here we are back below. Look for a 40 break on the downside. Look for a move below 113.44. A soft target I don't have on the report, but I would be looking at, guys, is that last swing low. That's right around 113, 112.97, 98. If you get that clip, just watch it. Wouldn't necessarily start to get out of the trade. Maybe take a couple of lots off if you're trading on a larger scale. But really, this is kind of the drop zone that you want to see. Okay, that's your objective October range low. Decent pivot in price. It would necessitate a break below that 38.2. So you're looking at basically 1165, 1190. Now, we also, before we get too excited on this, we need to see this material break below 1344. But let's say we do, you'd also start to look for some slope at that point, just to see if we have any guidance to the gradient of the decline. Just a drill to do with you guys. But if we look at this initial slope here, if this is in play, if it breaks, the median line would be around here, and that would put near-term bearish invalidation up here, and guess what's there? The weekly open. So it's a very clean setup. I just don't know if we can work with this slope right now. There's no validation. This is complete conjecture here, so guys, so don't run with this. But this is how I look to play things. If we get the break of this low that we're expecting, I'm going to look at this slope. The median line would have me looking here. If I'm not already on the short, this is where you look for a little bit of recovery and look to fade that rally. As long as that rally stays sub 1390, sub 114, essentially, you'd start to look for a rally to fade. Ultimately, looking for that move down into 112, 111.90. Okay, any questions on dollar yen? 114.40, 114.50, 114.30 is still critical resistance. It's too early to work with this slope. I just wanted to do this as a drill. But, as long as we stay below that 14.30, 14.50 level, I still think this thing's at risk for a little bit of a dump. Let me do also just one thing for the sake of argument here. I just want to see what this extension looks like. It's going to start stacking up. Okay, I don't want to stress those levels. Real near-term price action just off the intra-week levels here. But I don't think that warrants much respect at this point. Keep your eyes on this slope. Let's see a euro drop below 1340, a dollar yen drop below 1344 to get this going. This is another reason why I think euro yen could still see a little bit of a pop. Let's say that this rebounds a little bit in U.S. trade, and even if we do make it up to the upper parallel, I want to see failure ahead of 1440. 1430. Ultimately looking to see the breakdown here. Questions on dollar yen? Going once, going twice. Okay. Okay, what's next? Pound dollar. Here's cable. So another one that we've been following for a while. Here's what cable looked like. Well, I guess let me do dollar CAD real quick, guys. We'll do that for number 6 because Eman is looking at that. Here's what dollar CAD looks like, or here's what it looked like earlier in the week. Look, I mean, we were lucky on this when we caught the high last week. We were talking about that turn and exhaustion ahead of 129.27. He never actually got the 129.27 clip, but certainly the break below 128.60 right here was accompanied by a break of that slope. And on the pullback, we couldn't even get back into 128.60. That's the exhaustion at its finest. Obviously, we had the NFP, BO, NFP, and Canada, excuse me, employment figures on Friday, which really drove price action. But there's the bounce off of that near-term slope. Here's the hold at resistance at 127.80, former support, and then we push lower. So the objective was to look lower in dollar CAD, but as things turned out, it started to see a little bit of an exhaustion move before turning over again. So here's what the chart looks like now on the 240. We cleaned it up a little bit as far as the August high day close. I got rid of that and just kept the August highs, which was really close to the high day, to the weekly opening range highs. This is what faked me out here. Got me a little concerned on it on the rally. You pushed through. The 50% retracement did hold at 128.09. Probed just a little higher before pulling back. Now I'm starting to lose efficacy in this slope. So the problem with that is now I'm just going to stay as objective as I can, and the focus is on a perfect and well-defined weekly opening range. There's your weekly opening range lows. There's your weekly opening range highs. A break to the downside. At this point, you still need to respect possible bounce at 26.60. But that's what would mark the broader reversal. Remember on the daily charts, guys, where dollar CAD's trading off of. Pretty big region of resistance. Even on the weekly charts for dollar CAD that we've been following, this was huge. 50% retracement of the entire 2017 range converged right on the 50 line for the current operative slope. The 50 line, by the way, almost caught the exact lows here. So you would think on the rally, you'd find some resistance there. Okay, so that turned our focus lower last week. The pullback now is not really showing so much steam. I love where momentum turned. We kind of just probed right into the 50 mark and turned right off. But I do want to be mindful of a couple of different levels here near term, guys. Obviously, the slope off the 2012 lows is still sort of the focus gradient that we've been working with the last couple of months and years, I guess, at this point. And there's the slope right there. It was perfect support for a fourth test. The break saw acceleration, was resistance for 3 weeks before breaking through. That brings you back into like 26, okay, on the downside. Key resistance still 29.27. That's the weekly chart. Daily chart looks like this. There's that reversal. There's that slope. We were waiting for the break of that last week. We got it. Here's the decline. Yeah, we saw a little bit of an interruption and a bounce here, but I still think ultimately you look for that move into channel support. Maybe not as deep as 26, okay, but certainly into the channel support is what I'm looking for. Intraday looks like this. We kind of try to look for some sort of structure to decline. You don't have it yet. I was looking at this yesterday. It doesn't look so clean. Even if you kind of shift it, it doesn't work clean. So I haven't been able to find any kind of slope that actually looks like it wants to hold the price action that we're currently seeing displayed. So on such a scenario, play it simple. Just look for some parallels. Nothing yet. But again, that highlights sort of this region here just below. If it's an immediate drop here in US trade today, either way, I'd still be looking for like 26.63 on a downside move. Get rid of that 50. So dollar CAD. Any questions on this, E-Man? I know you're looking at this trade. Is there anything specific that you're looking at here? I still like it, broadly, I still like it higher, or excuse me, lower. But the problem is here, again, we talked about this yesterday, my guys, is trigger break and momentum. Or if we were looking at that trigger resistance. So the fact that you got it, again, did kind of faked me out. And we broke right through the Sunday highs. We pulled right back. I'd just be looking for a break of the weekly opening range on this. There's really not much data either out of Canada that we can really work with. So a little bit timid here on dollar CAD. Watch that down slope. As long as you stay within that, you want to see a tag of basic slope support off the lows would be ideal. All right, dollar CAD. Any questions on that? Yes, thank you. I missed the dollar CAD downtrend move as I got stopped out yesterday, but didn't jump in short again. I don't blame you, Amen. I don't blame you. And that's going to happen from time to time. It's just something we got to accept. I didn't think that it was going to make it back through 27.78. I wanted to see that hold. And then when it broke, it did make a little bit of a run, right? And it even went through the 50% retracement. You can't blame yourself for a trade like that. So I don't blame you for getting out or getting the stop, but jumping in, I don't know if I would have had the guts to do that either. Ideally, now hindsight's always 20/20, so this is kind of a pointless and moot point to do. But ideally, guys, if you have conviction on a trade like that, and you see a break like this and a failure, if there's a near-term trigger in price, a stop against the Friday high will typically be a decent trade a lot of the time, especially if it's a Friday high and a driven data play. Those are decent, but I wouldn't have been able to have the conviction to get that either, especially because we broke that slope, then broke back above. So you'd look for support there if that break is legit. We broke back below, so I don't know. Again, like I said, I'm losing a little bit of confidence in this gradient near term. But let's see if we can't get this lower. It's okay, we'll have other opportunities. You better believe it. Absolutely, yeah. That's always my motto. I never get too upset at myself if I miss a trade. Just stay attentive. There's always opportunity. The markets will always provide. Okay, that's dollar CAD. Pound, number 7. So here's what sterling looks like. This thing gets you excited for a couple of days. It kind of just takes a dump on you. Then you kind of get all excited again. And then it does something like this. You guys know where I stand, above 130.30, 130.20. If you're not sick of hearing me say it, I'm still looking for a broader, reversal, rebound, whatever you want to call it. This is a big, big support structure. We've been talking about 130.20 as a basic 38.2 retracement. It would necessitate a break below the May highs, below the October opening range lows, below the 100-day moving average, below slope support. If all that gives out, 30.20 is done, sure. 128.50 is on tap as just the initial target. As it stands right now, momentum has been holding above 40. So, from the momentum standpoint, it's not necessarily kind of convincing you that we're in a full-on downtrend. And we're still above support. Period. I still like fading weakness as long as you hold 30.20. Now it's been tough because you get these really nice run-ups, then quick failure, then we failed again at that high before pulling back. Yesterday we talked about raising our near-term bullish invalidation level to 130.60. Now I'm kind of cool with that too. There's a gap that we did inevitably fill late last week, but again, the weekly opening range low is just below that. And right now it converges dead on with slope support. So if we break below 130.60, guys, I'm going to be neutral, won't necessarily be bearish. It's the 30.20 break, okay, that would put me bearish. Other than that, we're still testing broader upslope support. As simple as you can keep things, guys. Just keep it simple. So, long story short, looking for some settling here, okay? I want to see this thing settle above 30.60 today in U.S. trade. Questions on pound dollar? So while we're talking about pound dollar, remember last week we presented pound and pound yen. Here's pound yen, a quick update on what that's doing. It held that major 618 slope line that we added on last week. You remember that, guys? Well, or earlier this week, rather, on the rally. We were looking at this. There's the 618, the 75% line, of that range. It was a nice resistance. It did actually hold. And the pushback here, taking out the weekly open, taking out Um, well, let me take that back. It took out the weekly open, and we took out the weekly opening range lows. Now we're testing the monthly opening range lows. Okay, so another conviction break here if we do get it, would shift the bias lower in pound yen. Not too crazy about getting too bearish on the pound, but I always like to present you guys with both sides of the story. So if pound starts to appreciate or broader pound appreciation, we're always going to favor the pound dollar relative on where we are in the technical picture. If the pound is going to ultimately see further losses, based on what we're seeing in the yen crosses, pound yen is going to be your best way of expressing that opinion on a bearish pound trade. So I like having both those on the table. It's sort of like a synthetic hedge, if you will. You know, taking your best shots on what would be the best play for pound weakness and what would be the best play for pound strength. And these are the two I'm still going to stay focused on. Okay. A break of the weekly opening, of the monthly opening range lows here. Specifically, I have a soft target at 148.43. We were talking about that when we presented this setup last week. That's the swing high that we made from back here in December of last year. So I don't want to get too crazy about it. The real area of you know, more technical significance for the near term would be this 47.60, 47.80 region right here. Ultimately, I do want to see 146.71 again. Questions on pound yen? I do want to see two things here, guys, real quick. Bear with me 1 second. Okay. Okay, I'm going to highlight this as well. The 100% extension comes here, and I also want to see what the larger extension looks like off the high. Okay, at the 100 off the high, if this is still all correction within the broader uptrend, remember, pound yen is still in a broader uptrend. You can tell that easily by just looking at the daily chart. No one's going to argue that, right? We made a multi-year break. We talked about this last week, yesterday. So the broader picture still looks up, and we're still within this embedded one just for the year. But looking at this again, near term 100%. If it's just a correctionary wave off the high, that's 47 into 46.70. So look at that range. A longer term measured move off the highs would take it down to 46. Too rich for my blood right now. Because of the confines of the upslope, these are where I'd look for settling on a bigger move lower here in pound yen. First things first, 48.43. Any questions on that cross? Yen crosses are on the old ticker these days, right? We went over euro yen, dollar yen, pound yen. What's going on with us? Can't pick and choose what the market offers. Curious to know, Mike, why sterling is the best play to trade pound yen in the event of pound weakness? Well, it's because of what we're looking at across the spectrum. So, Eman, you want to look at just the broader themes of what's happening. We talked about dollar yen early in the session. That's coming off big resistance, right? So if we move lower, what is that, Eman? That's yen strength, right? That's yen strength. So we were looking for this break. We're looking for the conviction below 1340. If we get it, that's further yen strength. We're talking about euro yen, right? Euro yen was a play right here. And what we were just talking about that a minute ago, saying, yeah, this is coming to a big support. If that breaks, that's further downside. That's yen strength, okay? So across the majors, if the yen is going to strengthen, and we like pound in general to the upside, then if you are in a pound long exposure, let's say you fade this move here today against 30.60 at some point, maybe the US trade session kind of fails, it gives you a near-term momentum trigger, and you take that long. Well, a good way to kind of hedge that synthetic trade is if you do see the yen or the pound start to be weaker, well, we're looking for yen strength as is. So that would put me in a more inherently bearish bias on the pound yen. Does that make sense, Eman? She says, yes, got it. Okay, cool. Cool. Good question. And I always like to do this, especially when we have a trade where it's like pound, where Look, the general consensus that we've had of pound strength in general for the last few months, guys, it has been fruitful. So from a longer term, medium term perspective, yeah, I think, being constructive pound this year has paid us off pretty well. It's just when you're playing these corrections, trying to call the turn of when the correction will conclude is very, very tough. All you can do is identify those key locations and try to be well positioned every time the market approaches them. If it doesn't get the rebound, it doesn't. 30-20 break would put us bearish. In that scenario, I'm going to look to pound yen. Okay. All right, let's move a little bit over to the side into the Aussie section here. Here's number 9. Australia, or the Aussie dollar rather, what can we say? Conviction, holding to our guns will pay 9 times out of 10. Well, I shouldn't say that, but it'll pay more often than not, okay? Aussie dollar, it was one of those trades where the focus has been for the last few weeks on this critical support barrier. I've showed you this chart multiple times. Again, on the weekly chart, it's highlighted by multiple Fibonacci considerations, a 38.2 from this year, a 618 from this year, a 38.2 from the 2016 ascent, basic slope support, all upslope support, 52-week moving average, you name it, it was all lined up at 67.30, 67.29. Daily chart also highlighted that as a basic 50 line for the current operative descending channel formation, or pitchfork formation, again highlighting it with basic slope support. It's just a great spot. Now yesterday we were talking about this as we were heading towards a 200-day moving average, and we were like, look, that's the level we need to beat. Okay, we came into it, we jackknifed lower yesterday, it was kind of heading lower, not interested in playing the short because of the critical nature of this support. Here's yet another stretch higher. Now I still can't get too excited until what, guys? Because we have to stay objective. What's the basic thing I'm looking for here? A breach of the weekly opening range highs. Very, very simple. It's going to further validate it, and it's going to give you that trigger in the opposite direction. So whenever you're trying to fade a big decline, and that's exactly what this is, guys. It's a big downtrend off the highs from the year. On the long, on the whole, okay, from the weekly standpoint, it's still in the uptrend. Okay, it's still in the uptrend. But from the yearly high here for the last couple of months, it's been pretty well defined on the way down. This is a big Fibonacci consideration, basic slope support. Again, we talked about the 52-week moving average. And at this point now, the market has made another rather substantiated rebound off that region, right? So, long story short, look for the top break above 77, 76.99 is where that high is, where we peaked out earlier in the week. That's the break that would shift our focus higher. Again, you got soft targets here at 77.35. Basic 236 of the decline would be 77.43. And this is the real test. Okay, this is the real test. If this breaks higher, you've got an objective break of the monthly opening range highs, the 2016 high, and again, that median line rather, for the broader downslope. And that would shift us back to a little bit more for a concerted long position. Till that happens, you're just playing a bounce off of support. Okay, and I do want to see Aussie higher. Questions on Aussie? Still like it higher above 76.30. That's the key support. Jamie's looking for a little bit of a dip lower in 76.25 or so, so I won't split hairs. And actually, that does make sense as you get back out further in time. The slope of that does start to dip a little bit lower, but this is still the key concerted critical support barrier. Okay, break below that, there's nothing till 74.76, bottom line. Questions on Aussie? All right, last but not least, I did want to just touch base briefly, number 10 here on crude prices. You did see me put out a piece on this one yesterday on Daily FX. Here's what it looks like right now. It's not necessarily an intraday type of position play, but on a broader scale theme here for where crude is trading, it's absolutely paramount. I mean, the weekly chart on this thing is just insane. Here's what it looks like. So you guys have seen this here before for sure, but just a quick reminder, we've been working with the confines of this ascending median line formation off the lows from 2000 2015 and 2016. The median line was a perfect pivot break, support, support. The upper parallel, perfect resistance, resistance. It looks like we're cracking it this week. Now we have to make a weekly close above that, but initial tendencies do look good, even from a momentum standpoint. This thing held basically 40 as support throughout the course of last year. Got a brief dip here this year, but we recovered and again bounced off 40. This is your first 60 break that you've seen since what, January, February. Okay, so it looks legit. You don't want to fight it. The question becomes, how do you get in long if you're not already long? And this is where, the classic retail trader will say, hey, I'm constructive. I like this thing into 60. Mike says that. He's looking at 59.50. I'm just going to take a long here. I'm going to put a stop. I don't know. I don't want to lose more than X amount. Those careless trades where you're just throwing out arbitrary numbers, right? A concerted stop here, guys, would need to be against last week's low here, 53.90 or so. So if you're willing to take a $4, $3 stop on this, that's all your perspective. For me, it doesn't make any sense. Okay, I'm not going to chase this. If you're holding longs on the breakout, then you want to kind of sit in that trade. I don't want to get out necessarily just yet. I do want to see this thing tap 58. I want to say 59.60, 59.60, that whole kind of region right there. As long as we stay constructive above this slope line, which is the 50 line for the current ascending slope, you start to look for a little bit more of a constructive play. So the weekly trade showing not only did we break that resistance at 54.75, we were talking about 55 really being kind of the key region because it was the yearly opening range highs. And last week we closed above the yearly opening range highs. So even if we were to erase, guys, all of slope, we take all these slope lines, we throw them out the window, objectively, you opened a year into a high. You tested that high all throughout the first quarter. Okay, you made a low early in the second quarter. Or actually, this is the start of Q3 here in June. And the recovery and the break through the yearly highs would suggest you're looking for a late year high. So any way you look at it, I mean, I don't want to say any way you look at it, but from an objective price action standpoint, I'm looking for a November, December high. Okay, so that would suggest, again, a stretch into 60 is not outside the realm possibility. That's kind of a sweet spot I'm looking for. Just ahead of that, you have the 200-week moving average, and again, that gives you a range of like basically 58.90. I'm going to call it 60, 59 rather, into the 60 handle. Okay, daily chart looks like this. So again, there's the big break at 50, yearly opening range highs, 618 extension off the ascent, off the lows we made last year. Big break. Near term, that's the critical support structure. Bullish invalidation is all the way down to 53.80. The only thing that would turn me straight bearish crude at this point would have to be a play below 53.80. Now, it doesn't mean that near term you might not get an opportunity to get some shorts in there. I'm just saying for the broader trend, that's the bullish invalidation level. Upside targets, I do want to just highlight the May low week reversal close. Okay, that was here. The low week reversal close for that decline and that range comes in at 57.96. Might be a soft target on the way up, but 59 into 60. Huge key region of near-term resistance. So the play would be either on a pullback to try to look for a long positioning or some stabilizing above 55, or if we were actually to reach into this region, I do think you start to look for a lot more of a possibility for a pullback. A Fibonacci consideration like that is pretty significant. When it coincides on slope, that makes it even more significant. So I would be expecting some sort of kickback, some sort of corrective play off the 60 region if we do get into that level. Intraday looks like this. Okay, pretty similar, nothing really new to update on this. Here's a 240 chart to kind of give you a little bit more reference. There's that median line, kind of just dilly-dallying there. Momentum looks like it wants to see a 70 break. So near-term setback wouldn't put this thing outside of the realm of possibility. It might give us opportunity to get back in. Look for a move back into the 50 line. I'd like to see this thing stabilize above 55. Okay, topside targets unchanged. Any questions on crude prices or anything else? Okay, so we're going to wrap it up here. If there are no other questions, guys, thanks for everyone who attended. Don't forget, you got the RBNZ interest rate decision on tap at 3 p.m. Eastern today. On account of that time change, we'll be looking for the Kiwi to see if we can't get that last spike higher to get a fade in. Or if it plows through, might be a bigger advance or a bigger base at play there. Not my favorite scenario, but I do want to see an exhaustion push on Kiwi. All right, guys, I will see you all tomorrow. Best of luck trading. Don't forget, Jamie's up in just a couple of hours here with the midweek strategy webinar. Cheers.